Hello all. All right, let's do an ABC problem. P15 in your textbook is a comprehensive problem. So let's take a look at that and let's take it step by step. The company is Advanced Products Corporation. They give us some information. First of all, information related to overhead costs. Their total overhead cost is $400,000. They break their overhead costs into two categories: wages and salaries, which total 300,000, and all other overhead costs, which is 100,000. Now remember, when we're talking overhead, we're talking about indirect costs. The next thing you should note is they've given us a listing of their activity cost pools, the activity measures related to the cost pool, and the activity for the year. So the activity cost pool they have four. One is supporting direct labor. So these are the individuals who would support the people who have been identified as direct labor. Another cost pool is order processing. The third is customer support. And then the fourth is just labeled other. The activity measures for supporting direct labor are the direct labor hours. The more direct labor hours at work, the more support you need. For order processing, it's the number of customer orders. For customer support, it's the number of customers. For other, we're going to classify the activity measure as organization sustaining. So it's going to occur regardless of whether we produce or not, so we don't have to include this in our analysis. Now, as far as activity for the year, we figure that we're going to have about 20,000 of direct labor hours. We figure we'll get about 400 customer orders and that we have 200 customers. The next table shows the distribution of resource consumption across the different activities. So what we need to do is we need to allocate wages and salaries and other overhead costs to those supporting direct labor, to the order processing area, to customer support area, and to other. The total of those have to come up to 100% because we're allocating all overhead costs to those cost pools. Now, during the year, it says Advanced Products completed one order for a new customer. So they give us Shenzhen Enterprises as our customer. And with that customer, you see that they ordered 10 units. Direct labor hours to do this was 2. The selling price is $300 a unit. Direct materials are $180 per unit. Direct labor, $50 per unit. So at the end of the day, what we want to do for Shenzhen is figure out what the total cost is related to their order of 10 units. Match that cost against the selling price and determine whether we have a customer margin that makes us profitable or not. So let's start solving this problem. Now remember, the 5 steps for solving an ABC problem include: 1, identify activities, activity cost pools, and activity measures. We already have done that. We know our overhead cost is 400,000. The activity cost pools that we have defined are supporting direct labor, order processing, customer support. Then there's other. We also have determined the activity measures, which are the number of direct labor hours, the number of customer orders, and the number of customers. So step 1 is done. We're on step 2. In step 2, we need to assign the overhead costs to the cost pools. And remember, that's called first stage allocation. So in our required 1, it says prepare a report showing the first stage allocation of overhead costs to the activity cost pools. So in our column headings, we have supporting direct labor, order processing, customer support, other, and total. In our rows, we have wages and salaries, which are going to total 300,000, and other overhead, which are going to total 100,000, to get a total overhead cost that's going to be allocated of 400,000. How much goes to supporting direct labor hours? For wages and salaries, 40% of the 300,000 goes in that column. So we multiply 300,000 by 40%, we get 120,000. For other overhead costs, we multiply 30% times 100,000, get 30,000. So the total overhead cost that's going to be assigned to supporting direct labor is $150,000. 120 for wages, 30 for other. Order processing, we're going to do the same thing. We're going to multiply 30% times 300, get 90. Multiply 10% times 100, get 10. Add the two, get 100,000. So of the total 400,000, 100,000 is going to go to order processing, 90,000 of which is for wages and salaries, 10,000 other. Customer support, going to do the same thing. 20% times 300 is 60. 20% times 100 is 20. 60,000 plus 20,000, 80,000. Then in other is 10% of 300,000, 30,000. 40% of 100,000, 40,000. 40,000 plus 30,000 gives us 70,000. At this point, we've assigned overhead costs to the activity pools. Our total overhead cost is 400,000. 150,000 has been assigned to supporting direct labor. 100,000 to order processing, 80,000 to customer support, 70,000 to other. Now that we have assigned overhead costs to the cost pools, we can calculate activity rates. So this is the third step in the process, and it's requirement 2. Requirement 2 says compute the activity rates for the activity cost pools. The first one we'll work on is supporting direct labor. The total cost assigned to supporting direct labor is 150,000. The total activity for the year we're estimating is 20,000 direct labor hours. So if we're anticipating 20,000 direct labor hours for the year, we're going to divide the 150,000 by the 20,000, and we're going to have an activity rate of $7.50 for every direct labor hour. Now let's look at order processing. The total cost, overhead cost, assigned to order processing is 100,000. The estimated orders for the year are 400. So if we take 100,000 divided by 400 orders, we're saying that it's going to cost us $250 per order. So that's our rate for order processing. The last cost pool that we're concerned about is customer support. The assigned overhead to customer support is $80,000. We expect to have 200 customers. So if we take 80,000 divided by 200, we get $400 per customer. That's the activity rate for customer support. At this point, we've determined the activity rate that we're going to use for each cost pool. Remember, there is no activity rate for other because other is categorized as organization sustaining. All right, now we're on requirement 3, which says prepare a report showing the overhead costs for the order from Shenzhen Enterprises, including customer support costs. All right, at this point, what we're doing is we're assigning our overhead cost to the cost object, and the cost object is Shenzhen Enterprises. So the first thing we're going to do is we're going to list our cost pools supporting direct labor, order processing, customer support. Next column, we're going to list our activity rates. Our activity rates are $7.50 per direct labor hour for supporting direct labor, $250 per order for order processing, and $400 per customer. The activity, according to this problem, it takes 20 direct labor hours. We get the 20 direct labor hours because, as you can see, there were 10 units ordered, and each one requires 2 direct labor hours per unit. So we just multiply the 10 by the 2 to get the 20. There's one order and one customer, Shenzhen Enterprises. So we take the $7.50 multiplied by the 20 direct labor hours, get $150. Multiply the 250 by the one order, $250. Multiply the 400 by one customer, $400. Add the 3 up, get a total of $800 that's going to be assigned to Shenzhen Enterprises. So the $800 is the overhead that we're going to assign to this customer. Okay, we're on requirement 4, which says prepare a report showing the customer margin. This is the 5th step in implementing ABC. The 5th step is to prepare management reports. For this report, we're going to prepare a customer margin. The customer margin is defined as the difference between the sales and the cost of sales. So sales minus cost of sales gives you your customer margin. In this problem, the opening schedule showed the units ordered, the selling price, and the direct material and direct labor costs for this product. So if we take a look at that again, we'll see that there were 10 units ordered. The selling price was $300 per unit. Direct materials was going to cost us $180 per unit, and direct labor $50 per unit. So the direct materials and direct labor are always going to be given to you. What you're going to be expected to figure out, and what we have figured out, is how to assign manufacturing overhead. Okay, so let's knock out this customer margin report. In this case, sales were 10 units at $300 a unit, $3,000. Our costs include 3 basic areas: direct materials, direct labor, and overhead. Overhead, however, we're going to break into the 3 categories of cost pools: support direct labor, order processing, customer support. So let's start off with direct materials. For direct materials, again, we're going to use the 10 units times $180 per unit, $1,800 for direct materials. Direct labor, 10 units, $50 per unit, direct labor, $500. Overhead to support direct labor, $150. We're just going to point and click. Order processing, overhead, $250. Point and click. Customer support, overhead, $400. Point and click. Let's add the cost column up. We're going to add the 1,800 plus the 500 plus the 150, 250, and 400 and get a total of 3,100. Our total costs are 3,100. Our revenue from sales, 3,000. we have a customer margin, which is a negative of $100. This isn't a smart move. We need to reevaluate what we're doing with this customer. All right, that's it. So what we've done with this problem is we've taken you through the 5-step for an ABC costing analysis. The first step, again, was to identify the activities, the activity cost pools, and the activity measures. We did that right from the get-go. Second step was to assign overhead costs to activity cost pools. We did that as well, and we referred to that as our first stage allocation. Here's where we did that. Our third step was to calculate activity rates. So you see here where we calculated the activity rates, we came up with the $7.50, the $250, and the $400. Once we calculated those activity rates, we're ready for step 4, and we assigned the overhead costs to each of the cost pools. Then last of all, we prepared a management report. The management report in this case was a customer margin because we wanted to see how profitable the customer was. An alternative to the customer margin is the product margin. In that case, we would look at the sale of the product, costs related to the product itself, and come up with a product margin, which would show whether the product is profitable or not. Good enough. Time to do some more drills. The only way to learn this stuff is by doing drills. Take care. Good luck.